Hi, I'm Ian McGugan with a Report on Business. I'm here today with my good friend and colleague, Brian Milner, to discuss commodities. And Brian, you are a commodity bear.
I am, and I've been right for the last 4 years, and not many bulls have been. I understand, though, that you think the tide is about to turn.
Well, I wouldn't say about to turn. I mean, I think we're going to see a nasty few months ahead as the last of this commodity decline washes itself out. But yeah, then I think that, by late 2016, early 2017, we are going to see some metal prices start to move back up.
Well, history contradicts the view, because historically, when there's an end to a commodity super cycle on the way up, it's replaced by a bear cycle on the way down, and it's usually just about as long. So it could easily be the fact that we're looking at another 10 to 15 years of depressed prices, depending on what happens to China, the biggest buyer in the world. You're saying that China is still going to be buying this stuff at decent enough levels to keep prices up.
Yeah, exactly. I do think that, history sometimes confirms what you're saying, but, is it going to repeat itself exactly? I think what we have to do is draw a distinction between different markets. For instance, the markets for things like copper and zinc, to me, seem to have pretty good fundamentals. Another year or so, we're going to start seeing some move up in those areas.
But that's based right now, that view that you're espousing is based on more production cuts, firmer prices because there's lower supply. But in fact, production is not dropping as fast as a lot of experts thought, because commodity currencies are falling apart. That makes it cheaper to keep producing, and since they're sold in US dollars, it's actually more profitable for a lot of companies to keep doing it.
Sure, and I hear that argument a lot. But I think that you look at a lot of these commodities, nickel, for instance, half of producers are not making money at these levels. We are going to see some production closed over the next year. The other commodities are different. Iron ore, it's basically a case where three giant producers are engaged in a race to the bottom, and where that all ends, who knows?
Well, the key obviously to recovery of both of those products is steel, and the fact is that the steel outlook looks terrible. China is the core to this. They're the key. If China gets its growth back up, everything will be all right, but nobody thinks it will, because where it has to be for these markets to recover is at about 8% annual growth. They'll be lucky to have 4 or 5 this year, and that's going to continue for a while.
Well, I would disagree. I think that what you have to look at is the fact that base metal consumption in China has not declined. The growth rate has come off a little bit, but in absolute terms, it has not declined.
But steel production is a mess, and
steel production is a mess. But copper needs and needs for other base metals is still pretty strong.
They can strip it out of all those empty condos they've been building.
I do think that the next year ahead is going to see, initially some more pain. I agree with you, but then I have a far sunnier view.
Okay.
Until next time, Brian.
My pleasure.